Did you know that the wealthiest 10% of American households now own 89% of all US stocks? Even during the COVID-19 pandemic, when the rest of the world struggled, the top 1% managed to gain a staggering $6.5 trillion in corporate equities and mutual fund wealth. So if there's a single secret to building wealth that the super rich know, it's this. You must own equity to become rich. In other words, you must invest. Saving alone won't make you rich. Hi, if you're new here, I am Chi and I have experience in investment banking and tech, and my passion is personal finance. In today's video, I'm going to explain the basic of stock investing, what stocks are best for beginners, and how you can get wealthy from stock investing. Let's go. So, what exactly are stocks? Imagine you own a business and you need a large amount of money to grow and expand it. One way to raise funds is to find investors, and the stock market is a great place to connect with investors. To raise a lot of money, you must make your company first publicly available and sell a portion of your ownership in the company to these investors. And that's what stocks really represent.
You can call them stocks.
Or equities.
But I see them as American business. I've owned a piece of American business.
As Warren Buffett said, a stock is really a piece of ownership in a company. So if you buy a share of Apple, you become a partial owner of Apple, no matter how small your ownership may be. If you invest in an index funds like S&P 500, which includes the top 500 US companies, you become a collective owner of those 500 companies. All right, but how do you actually invest in stocks? So there are two main strategies when it comes to stock investing: passive investing and active investing. I've actually done both, and here are a few essential things that you need to know about each. Active investing, also known as trading, means that you buy and sell stocks frequently. People who do this professionally are also known as traders. So traders focus on short-term price swings, and they are not primarily interested in a company's long-term growth. Some even buy and sell stocks within minutes or even seconds of the same day to capitalize on short-term gains. This is known as day trading. Although some very experienced traders do make a lot of money doing this, this strategy is very risky. Statistically, only 1% of day traders actually make a profit. 1%. So, as a beginner, I would not recommend this approach, whether it's active trading or day trading. But if you still want to pursue or practice it, I recommend starting with only a small amount of money that you can afford to lose, because if you don't know enough about a stock, if you don't know what you're doing, then it's like gambling. And you could lose your life savings doing this. It is so important when you're picking a stock, always do your own research. Treat it like you're buying a tangible business. How do they make money? Who's their competitors? How do they measure up? Any innovation or disruption in the industry? And is the stock price fair, high, or low? You will need to know all of this about a company. And if you can't answer all of these questions, I would not recommend investing in that stock. Here's another tip that I have for you. Don't jump in any stock blindly just because it's popular. Take AMC, for example. So AMC stock was the spotlight of 2021, and everybody was trading it like crazy. The stock price was going up and up and up for a while. Many people rushed to invest, only to lose most of their money when it crashed overnight. It was called a meme stock for a reason. Even now, with many stocks reaching all-time highs, everything seems overpriced. How can you tell which stock to invest in and whether it's cheap or expensive? If you want to learn how to analyze stocks and invest in the proper way, let me know in the comments down below. Maybe I'll create another video explaining the key financial metrics in detail. Now, if active investing sounds like too much work or too complicated for you, the good news is we have another strategy that is a lot simpler and more beginner friendly, which is passive investing. So passive investing involves buying a stock and holding it for the long term, which can be a year, can be even decades. With this strategy, you hope the company you invest in will grow and therefore the stock value will go up. Even if you feel knowledgeable about stocks, researching and keeping up with company news and earnings reports takes time. If you don't have the time and to dive deep into individual stocks, passive investing is what I recommend. You don't need to constantly monitor a stock performance. You don't need to be a genius to make money from it. You can pick individual stocks that you know really well about or index funds. So index funds is essentially a basket of stocks, and it allows you to diversify and reduce the risks that tie to a single company's performance. Some great index funds that track the top 500 US companies that I recommend are FXAIX, VTI, and VOO. This is what I also have in my portfolio, and it's been working wonderfully for me in the last few years. In fact, the most famous investor of all time, Warren Buffett, is a huge fan of index fund investing. Even better, index funds allow automatic investing. So you just need to set it up once and your money will get invested into an index fund on a monthly basis, and it's going to grow over time. So it's kind of like set and forget. It's the least time consuming and requires minimal effort while still providing decent returns. What more can you ask for, right? And this is my favorite kind of setup because it frees up a lot of time and stress when it comes to investing for me. Now, to buy and sell a stock, you need an online brokerage account, which is like a middleman between you, the investors, and the public companies who need to raise funds. You will need to open an account with them, and it's normally free to open one. Fidelity's and Vanguard are some great brokerage companies. Okay, but now you ask, this sounds great, Chi. I'm ready to invest, but I don't have a lot of money to begin with. How can I actually get wealthy from stock investing? So here's a little fun fact about the stock market. The US stock market alone is worth around $40 trillion. So you only need a tiny fraction of that pie to become a millionaire. Easy peasy, right? Well, not so fast. It's definitely possible thanks to a magical thing called compound interest. Let me explain this concept using a very simple example. Let's say you can afford to save $500 a month to invest in a S&P 500 index fund like VTI consistently. You invest it for 30 years, and by the time you retire, you will have become a millionaire. Now, is it guaranteed that you will become a millionaire? Of course not. Nothing is guaranteed in the world of investing. But using the historical performance of the S&P 500, you can generally expect the stock market will go up in the long run. And that's why it requires patience and consistency. The earlier you start, the faster you get to your goals. Every day you delay investing, you're getting further and further away from achieving them. You don't need to start with a large sum of money. Begin with an amount that you can afford, whether it's $5, $10, $100. Start small, gain confidence, and grow your nest egg from there. Now, here's my question for you. What part of investing confuses you the most? Let me know in the comments and I may create a next video about it. If there's one thing I hope you take away from this video is that investing doesn't have to be complicated, and it's certainly not just for the rich. Everyone should be able to invest and build lasting wealth through stock investing. I genuinely hope that you found this video valuable. Thank you so much for watching, and please share this video with your friends and family so we can empower as many people as possible with this free financial education. And don't forget to subscribe to be notified of my next video in this investing series. All the best and see you soon.